Good morning and welcome to this week's recruitment discussion with Jump. And this week we're talking about the permanent market is falling, as we know, but are you set up to survive? And as usual, we're talking, if you're watching on YouTube, thank you very much. We'd love you to subscribe if you've not already. If you're not watching on YouTube, then you're with us live. Great. But as usual, here are some facts that might surprise you. And I've spent some time this week digging out some facts because I think this market is really important about the perm market. So, fact number one, 4 in 10 UK employers have already made counter offers this year. And in London, that is nearly 6 in 10. And that came from the CIPD sort of labour market outlook. So what it said, that it found that 40% of UK employers have made counter offers in the past 12 months. And in London, I say that's nearly 60%, earning the tag of counter offer capital in London. For those employees, though, 38% matched the new offer and 40% went higher. And it's accelerating. 51% of employers are already using counter offers. Sorry, employers, are using counter offers to say that they have increased how they use them, and 8% expect to use them less in future. So it's growing. So translate that into your agency. Every time you make a perm placement, okay, you closing one or two chance. You've got a 1 in 2 chance, because in London you've got a higher chance of people actually accepting a counter offer. But if we're honest, before you use that stat, you'll see that 57% of employers accept counter offers. 80 to 90% of those accept them and leave in the last 12 months. And that's all over the UK recruitment blogs. It's all over company blogs, etc., etc. However, I couldn't find one actual stat that could be backed up. And I use ChatGTP, I use Claude, I use Google, I use Copilot. So the only figures that I could find to back anything up with regards to counteroffers came out of those CIPD figures. So all the figures that you're quoting about people accepting counteroffers, I can't find any proof on that. So be careful giving those figures out to your clients, because they won't be able to find any proof either. Second facts.
Yeah.
The government tax permanent hiring is up by nearly £1,000 a head per year. So 6 in 10 employers say they already have stopped hiring because of that. So from April 2025, the national insurance rose to 15%, as we know, and the threshold went down from 9,100 to 500, and that's roughly £938 extra cost per person. 60% of the UK business say that the NI rise will reduce their ability to hire, and 29% have already paused or slowed down recruitment for that reason. Third facts: the Employment Rights Act has pushed the UK hiring intention to the lowest levels ever. And again, this came from the CIPD winter outlook, which surveyed 2,000 employees, and they found 37% plan to cut their permanent recruitment specifically because of that act, and 74% expect it to increase employment cost. Only 57% of the private sector employees plan to recruit at all in the next 3 months, and that's down from 65% in autumn 2024. So you're starting to see there's a massive effect that's been happening on the perm market. And the last fact that came out: even when employers do hire, they're paying less. The KPMG and REC report on
Yeah.
jobs shows a slowing of salaries for permanent staff, and that's rising to its weakest point that it's almost been for 4 years. So while candidate available is getting more, there's more candidates available, more candidates are chasing fewer roles, and there's been less money or less salary being offered for those roles. So there's some real issues happening in the perm market, and we're going to address those today, Dave. So look at that. So let's jump
I
straight.
always like the facts. I always think if we don't start with facts from you, how we're missing something. So it's
Well,
important.
I do like it to dig out a good facts. I think it's right for our people to see them and actually understand what's happening in the market and what's driving that. So let's go back into that KPMG and REC data, showing permanent placements have declined for most of the last 18 months. In fact, the facts say since 2022, the perm job market has almost halved. The number of jobs advertised has halved since 2022. So why are so many agencies still planning for perm to bounce back instead of planning for it not to?
Well, I think the reality is, and the honest answer is that most agency owners are managing their own psychology as much as they're managing their business. And perm, for a lot of companies, is their identity. The companies that built their model in the 2010s, there was a bull run, perm fees were good. The model is backed into their targets, it's backed into their structure and their self image. So to plan for there being no perm or no bounce back, it feels a little bit like surrender. You've got your costs are sunk into the current model that you've got. Your desk structure, your headcount, your CRM integration, your fee splits, all of those for many companies are optimized on contingency per volume. So again, if you're trying to say to an owner, plan for it not to come back, that doesn't feel good when you look at the psychology of running a business as well as actually just running the business. And there's always a recovery narrative that's available. There's always the possibility to believe that in the next quarter, things will turn around. There's always that recovery nature. And I would say finally, I think that retained and contract, which are different, obviously contract's a different service, but so is retained. They require a different skill set and a different muscle. So if you're running a business that is mainly focused or has been mainly focused on perm, you've got to look at it and go, well, actually, half the people I've got now, how do they have the skills, the muscle to do a retained model if that's the offer, or an SOW model or a contract model? And often the answer to that is no. So it's getting to understand the psychology of the owner running the business as well as how he or she runs their business.
So it's interesting, isn't it? Because I've got the same sort of thought process that most owners are running their business on a market that they grew up in, not the market that they're actually in. And you can't sort of run a 2026 recruitment business with a sort of 2010 mindset. And that's from a tech, AI, information, etc. And just the information that we've talked about there, breaking a perm market down in that way is really problem. And what you said about, the owners having to admit that their model's broken, you know, and changing it is a lot harder than hoping for the market to come back. And so they're still hoping the market's going to come back. And as we know, hope isn't really a strategy. But even the old style, which is, if you think about recruitment as a product and a service, that has changed so much in the last 12, 18 months. And if we haven't changed with it, then all the PR that you're putting out, all the marketing that you're putting out, isn't helping you develop your business. And so the agency that are waiting for the bounce backs, the ones that will generally react last when it does come. And I think some people that are listening to this webinar or will log on to this webinar probably won't be here in 3 years' time. Not because the market's killed them, it's because they've refused to change to what the market is actually doing and what the market conditions are. And I think that's the biggest problem, is that for the first time, we have to change to adapt to the marketplace, because the market is changing significantly, and those changes will be lasting for longer than they were in, let's say, 2008 and things like that. Very harsh recession, but bounce back reasonably quickly. It's not going to bounce back as quick as we thought, and things are changing massively because of the way that the market has been forced to change because of all the pestle forces that have come into place. And those things are really important. So we've got to start to look at that. So moving on then, not every agency wants to add a contract desk. And that's a legitimate call. We've talked about adding contract desks to perm. So for the ones staying perm focused, what actually does getting better at perm delivery look like when there are fewer roles and more agencies fighting for them?
I think this is a great question, and it's absolutely the right question to ask ourselves when the market's been squeezed. I think better perm delivery, better perm business. For me, it's about winning the briefing, not just the role. So most agencies are in competition for the same brief. So the ones that differentiate it at intake. That means asking the harder questions. Why does the role exist? What's failed before? What does this filling this role mean to the hiring manager, to her project, or is that written down? Better briefing gives better intelligence to candidates, which means you look sharper before you even make a submission. So I think that's really important. And I think it's the old line about submission quality over quantity. I still hear of agencies, we've got to submit 5 CVs, so let's get a couple of good ones and 3 ones that aren't very good, but we've got to hit 5. If you're in that type of game, very difficult to win out on perm. It really is. You know, if you can connect the candidate to the specific role that needs solving, one candidate should be enough. I accept that that isn't always the case, but if you're thinking along those lines, you're thinking better. And I think adopting the mantra that speed where it matters, but patience where it doesn't, is really good for perm. Because you can't just get to the first candidate and send them and away you go. Because if you're in a race with other agencies, if you haven't got retained, if you're not doing a search, if you're not being paid to do that work, then you've got to have some patience. You know, being disciplined on not padding the shortlist, as I said earlier. Remember that it's signal versus noise, especially when the clients have been bombarded with candidates. And seeing, for me, also seeing that the candidate relationship is a competitive advantage. How do you look after your candidates? How do you engage with them? How do you keep in contact with them? Are they just a number, or are they somebody you genuinely care for, genuinely want to place? Because if you look after the candidates better than anybody else, you've got a better chance of succeeding if your business is perm only.
So I think it's a very simple conversation. If you can't justify yourself why your client should use you and only you instead of 3 other agencies, then you're not a recruitment business. You're just a CV forwarding service with a logo. And I think we've got into that process where you said there, we're sending 5 CVs, we're giving the clients lots of choice. The clients don't want choice. They want an expert to say these are the right 2 people. They want an expert to be absolutely spot on about the right skill set, the right behavior set, the right personal profile, the culture profile, etc. And so I think if you're not building a database of candidates that match your client's needs, then you're just the same as every other recruitment agency. We go back to what we said the other week about 95% of what you do is the same as every other recruitment agency. It's the 5% that you do differently that makes you better. And so if you're not back within that client within 48 hours with a candidate that's already been fully briefed and can actually do the role, then someone else will have that candidate. So I think we've got to work really quickly. And you mentioned a comment there about retained service versus contingency and things like that. And I think even on contingency, if you act like a retained search firm, so a full process, real insight, real relationship, but more importantly, using that word consultative comes to the front. Just look at the first stat that we're talking about. Why are we not warning clients of things like that? Why are we not pulling candidates out? Why are we not changing our recruitment process to match the market conditions? And I appear to be saying this an awful lot at the moment. You can't recruit like it was 2025, 2015, sorry, when it's 2026, because the market's different.
Yeah.
Candidates' attitudes have changed. Clients' attitudes have changed, but we've not changed. And I think that's the problem that we're facing. So I think, better perm means working fewer jobs, but having a higher placement ratio because you're not wasting all of that time sending candidates or poor candidates to a poorly qualified role to a client that's got another 5, 6, 7, 8, 9, 10 agencies working that role where it just becomes a lottery. And I think we've got to start to think about if we are sending quality candidates to fewer roles, guess what? We'll start to make more placements. But guess what? Once we start to understand the roles that we are good at actually placing rather than working the roles that we hope to place, we start to focus on those type of roles and those type of clients. And therefore, I can almost guarantee if you did that, that your placement ratios would start to go up. So rather than making 2 placements every month, you might be making 3, 4 placements every month because you're not spending all of that time allocating it to a role that you will never fill. or potentially have a less than 50% chance to fill. And you've said this on a lot of occasions, Dave, that, if you think about when I started in recruitment, the average recruiter was meant to bill 120K a year. Now, think since the early 90s, salaries have gone up, fees haven't really gone down, percentage margins haven't really
No.
changed that much, etc. But now the average recruiter bills 90K. So we haven't adapted to how the market has changed, nor have we adapted to what's going on. So if we don't adapt, then things are going to be a little bit more circumspect. But I think this change in the marketplace is a real make and break change in the marketplace for a lot of recruitment agencies. So let's move on to that sort of question. Let's go back a little bit. Okay. So temp and contract billings are at their strongest levels for 3 years. What did the agencies who built a contract desk early understand that the ones who avoided it still don't?
Yeah, I don't know that the ones that have avoided building a contract they still don't understand it. I think they're navigating that path. Well, how do I get to it? And have I missed the boat? And the answer is no. Depends how you structure your business. But the ones that understood it knew that the market demanded a wider range of services. So just supplying perm was not going to get them where they wanted to do. Some of them were on an exit journey, which was much more prevalent 10 years ago than it is now. A lot of companies, a lot of businesses are running lifestyle businesses very successfully, but the idea of an end game for them where there's some sort of event seems much further away now than it did 10 years ago. But contract annuity brings a greater valuation. So getting that split, 60-40, 70-30 in favour of contract makes your business more valuable. And I think some of the owners understood that, so they built a contract desk. And talent in the world of work, both in the UK and around the world, is moving to a more fractional freelance economy. We know that from the stats from the REC, from the KMG, from the work that we've done. So I think understanding that context, many of our recruitment leaders who started contract business added that. And also my experience, and I can only say this anecdotally, more people who have set up recruitment businesses in the last few years have come from a contract billing desk than a perm billing desk. That's completely anecdotal. You couldn't chat GTP that and question it because it's just what I feel. So you've got people that when they set up, they do perm for cash because they need urgent cash, but contract bills them value.
Well, I will take that challenge and try find that stat, Dave.
Yeah, you won't because it's just in my head.
Right. Okay. Fair enough. But I think cash flow doesn't care about identity. You mentioned
No.
cash flow there at the end. It cares about billing, and contract billing is doing the heavy lifting right now because contract and temp billing is starting to come back, and it will start to come back quicker and faster. And perm will probably take a longer time to recover than it normally does. So I think contract isn't a consolation prize. I think it's a difference between margins, and it needs planning and it needs funding like it's a new business. And not everybody wants to do that. And I can completely understand that. But if you're not going to do that, then you've got to change what you're doing in your permanent market to make sure that your contract market, the people who've got the contract doesn't bid. And I think every month you don't build a contract desk, you're not protecting your perm business. You're just you're basically subsidizing your competitor. And I think if you put that in reverse, if you're not building a good permanent business, you're not protecting your contract business. And I think having 2 feet in a client is always better than having one. And 2 feet is harder to remove than someone on 1 foot.
Yeah.
And so I think we've got to start to think about those things. And I think there's a lot of people who will say, well, I'm always a permanent agency. I'm always a recruitment agency. Well, if that's the case, then you've got to do something different to help capture revenue. And just waiting to see how it goes isn't the right thing. And so if you are going to build a contract or temp business, then you've got to plan that properly and develop that properly. And you've got to really push it in there. If you're not, then you've got to change your perm business. Because if you don't change your perm business now, then I think we're in a big problem. So a lot of people are surviving off their contract and temp revenue, but they could be subsidizing it so much more with a good perm revenue. Now, perm revenue is shrinking and hard, but those people who are actually making good money out of the perm market at the moment, they have already changed their services, their products, their go-to-market strategy, and therefore they're capitalizing from the clients that are still recruiting, because there are still a lot of clients recruiting perm out there. It's still a good
Awesome.
opportunity to make money, but what the clients have is more choice. Okay. So I'm going to put another contract question in just before we move further. Okay. What to be true before an owner spends money on building a contract desk while perm is still paying the bills?
For me, simply perm, the business needs to be genuinely stable, not currently profitable. Perm, we know is cyclical, but if you can see that you're getting 80, 100 grand a month, whatever it is, whatever the size of your business, and that is going to be maintained, that's important as you're building a contract desk. You've got working capital headroom or a funding plan. Because as you know, contract consumes cash. It's good for the bottom line when you're building it and you're getting paid on time. But just last week, I was with a company, and their challenge was their payment terms had gone to 60 plus a month. So they were paying their contractors for 3 months before they got paid themselves. And then if there was a glitch on the old standing PO number, it was difficult. So you must make sure you've got a funding plan or some clear working capital headroom. And there's genuine client demand, not just market logic. The market needs contractors is not the same as our clients are asking for contractors. So before you go and set up contract desk, make sure you understand what the demand is and what's happening. And I think that the final thing is that you can hire somebody or somebody who actually knows what the contract market is, actually knows the legalities of it, actually knows how to work that market, actually knows that it's a completely different pace, it's a completely different way of working. Dual desking still works very much in companies, but normally I find with dual desking, the person who does that has a preference for one or the other, and it's getting the best out of those skills. And you've also for contract, you've just got to understand the margin and the pricing model. You know, for example, doing a margin at 12% and being paid on 30 days may be better than doing a margin at 13% and being paid on 60 days. You just have to understand the dynamics. And if you don't fully and you've got a good CFO, they will be able to help you. But you've got to understand that before you set off.
I think to me, it's a simple question, that if you ask a recruitment agency owner, why are they doing this? And if they say because everyone else is, then I'd be saying, well, don't, because that's not the right answer. You've got to look at what the answer is. And I also think that our expectations of contract is that it's fast revenue when it's not. It's a slower burning revenue, but it's a more consistent revenue over a longer period of time. So if you can't survive for 6 to 9 months without your contract desk paying its own way, then you've got a strategy issue. And that strategy issue is poor. So you've got to be able to fund that slow bleed. You've got to be able to fund because that's what's going to happen. And I think your comment there about actually recruiting somebody who understands the contract market or the temp market is an absolute must have rather than just trying to convert a perm person who
Yeah.
might be not quite happy what they're doing at the moment, but will have a go at it. That's not the right thing anyway. And anybody who comes to talk to you about contract and help setting up, I see so much things on LinkedIn at the moment about, we can get you billing 200K within 6 months, etc., etc. Anyone promising a fast return is selling you something that isn't going to happen, because I have never seen a fast return in the contract market, because that contract market is drip fed into the business, okay, rather than the large perm fees that drop immediately. But after a certain period of time, it does create that consistent billing because you've got the actual volume to create consistency. Where I remember starting in the contract market, you get to two contractors and you're thinking, great, all of a sudden one stops, you get to five, two stop, you get to six, four stop, you're then having to build again. And you've always got that yo-yo build. It's only until you get to about 15 contractors that you then start to see stability. Because when two stop then at 15, it's not such a big problem, okay? Because you can replace and what's going on. So
Yeah,
to
yeah.
get to that 15 heads, it takes an awful long time for a contract recruiter to get to that level, okay, of consistency. So you've got to be able to afford that, okay? It's not an experiment, it's a strategy. And I think that the way I described it when I sort of first looked at this is you don't burn your house down to build the extension. Your perm business has got to be able to pay for it, okay, and stand still and stand firm whilst you build that extension. There's no point building an extension if your house is going to fall down. And I think you've got to look at it in that way. And I think when we start to think about our perm market, if you've got a good, stable perm market, good, then potentially you can build. If you haven't, if your perm market is yo-yoing and you think that contract is the nirvana, then you're going to be very, very sorely mistaken, and you're going to be very, very in a very far difficult position in probably six to 12 months' time when you move forward from there. So I think lots of differences. So let's move forward then. Tax changes and employment law get the blame for that perm decline. But what's happening underneath that nobody talks about? Are talent pools generally getting shallower, or is AI already doing the sourcing job clients used to do or we used to get paid for doing? What's actually happening underneath?
Well, I'm a big fan of AI and integrating AI into the business. Last night, I went to talk to Sarah O'Connor. Sarah writes for the Financial Times, and she writes about the future of work. And she was launching her book, "We Are Not from Machines." The fight for the future of work, which is all about AI integrated into the future of work. And I'm a great believer that the case for paying a fee purely to find names is harder to take now with the rise of sourcing tools. But it gets more nuanced, and everything that happens around the sourcing, AI can help us surface a list. But what it can't do, and what we're so important for, the reason why we exist, it can't tell which person on that list is genuinely open to moving and why. It can't navigate the conversation that turns a passive candidate into an engaged one. It can't read the room on whether a candidate will actually accept the job if offered. You go back to your first stat at the beginning, that it's 50% or so, something like that in terms of counter offers. AI is not going to help with that. It can't manage the dynamic human process when the automated process goes sideways. And AI can't make a judgment call about fit that goes beyond keywords and career history. So the role of AI is vital, that the role of the professional, adaptable, clever, intelligent recruiter becomes even more important as we weave AI into our processes. And we've got to be better at what we do. We've got to justify what we do, and we've got to show that. And working hundreds of jobs and hoping we get one is not the way to do it.
It's interesting, isn't it? I think that I don't think the pool is getting shallower. I think the pool is getting better protected.
Okay,
And
okay.
I think people aren't going to sit on job boards and wait for you to call anymore. They're not doing that. LinkedIn's not yielding the results it did 3, 4 years ago, and it's the RI is getting smaller each month. So the question is, where are you fishing for your candidates? And I think a lot of people are still forgetting that your database has most of the answers. But if you've not been preparing your database to answer the questions that you are now asking it, or even AI is asking it, then you will not be getting the answers that you desire. And I think we'll revert them back to type and doing the usual things. We'll go fishing on the job boards. And therefore, what you're doing is you're getting the weaker candidates in the marketplace, hence your counter offers is so high, etc., etc. So if you start to do things right and start to protect your own talent pool that you have on your own CRM, then what you're going to start to do is reduce the cost of your acquisition for candidates and reduce the cost of your recruitment process. Okay. And therefore you can charge more. So if you reduced your job board spends or LinkedIn spends, okay, you can survive because you've got less cost in your business, but you're now making more profit out of your 15%, 20%, 25%, whatever you're charging. So I think we've got to start to think about how we do that. And you think AI is already doing the sort of the first pass of sourcing, and it's doing it for free. So great. So why aren't we doing that? So I think if your whole pitch is I can find candidates, then you've lost the argument. Yeah, because it's
Yeah,
not that.
yeah,
Clients
yeah,
want to know that you know the market already and have a candidate pool before they start looking for that person. And last week we talked about, or the week before we talked about being the authority in the marketplace. And the authority isn't being having a good name. The authority in the marketplace is that you've got good data and you've got the candidates ready. Because when clients come to you, you can already talk about what's actually available in the marketplace. So you're not going to find candidates in the weaker pools. And the weaker pools are the job boards because that's where the weaker candidates go to put themselves out for work. Why are they not in work? Is because they're the weaker candidates in that process. So we've got to start to think where we're fishing. And if you then start to think agencies are still selling access to candidates, then, you know, machines have got that access so much quicker.
yeah,
AI's got that access quicker, and your clients can buy that. Your
yeah,
clients can develop
yeah,
that.
yeah,
Okay. And therefore, you're doing yourself out of a job. And candidates used to think about the candidates we used to fight over, they're starting to ignore us entirely because we haven't got a relationship with them. We've got, and I explained this, had this conversation. I explained, or had this explained to me by a young lady years and years ago, who now runs a very, very large recruitment agency. And she said, we need to stop treating candidates like a one night stand because you get what you want from that candidate, and then as soon as you don't have anything or you don't need anything from them, you eject them straight away. And then you never have a relationship with after them. And then 6, 12 months later, you go talking to them and they're expecting the same sort of results. And they don't get that because you've dropped them like a stone. So we've got to start to think that we've got to create a better relationship with our candidates to create a better understanding of the marketplace, but also then to have those honest and open conversations with a candidate about counter offers, about buybacks, about how many offers they've got in the marketplace, and whether or not they're going to accept your offer if that offer comes. And I think we're still not having that in-depth conversation because we have it over a very short period of time when we introduce them into the recruitment process. But we should have been having that 3, 6, 12 months ago if we'd have found that
yeah,
talent pool and
yeah,
started to nurture that talent pool. And we're not doing that. And I think that's the way the perm has got to go. And if you think about this, and I work with a number of sort of headhunting companies, they're not under pressure. They're not having a bad time. They don't seem to be having a bad time. Why? Because they've got an in-depth knowledge of their candidate
yeah.
pool and a personal relationship with their candidates, where recruitment does not.
And the search service, search business, is having a really good 18 months or so. And you saw how big they can be with the announcement that Corn Ferry bought AMS,
Yeah.
850
Yes, they
million this week.
did.
And
Yeah.
now Corn Ferry are a huge organisation, and most of the companies that we're involved in and we run are not that big. But clearly, that upper end elite first class service, quality candidate engagement and relationship is where the money is.
So let's change tact a bit then. Perm isn't going away, and we know that.
No, no.
But the way it gets won has changed. What does a perm consultant need to do differently in 2026 that wasn't even on the radar, let's say 3 years ago?
Well, 3 years ago, for instance, when AI was in its beginning, it meant CV formatting or job ad drafting. Now, if you're a successful perm consultant, you should be using AI as a research tool, as a positioning tool, not just as a writing aid. So, can it find some market intelligence? What's going on with the client that you're trying to place candidates into. AI is there to support you running your desk, running your company. I think a perm consultant in 2026 needs to build a visible point of view, not just a network. It's fine to have a network of candidates or a network, a community that you're involved in, but what is your influence in that community? How visible are you to that community? I think it's that advisory bit. We've said it many times. The role of a recruitment consultant in 2026, the consultant bit is as important as the recruiter bit. And if you're placing people on contract and perm, you're in that dual desk, understanding IR35, contractor employee classification well enough to offer advice and be intelligent. And treat candidate experience as a retention discipline. You know, the way you place contractors and when they come to the end of their contract, you want to know if you can place them somewhere else. It's something that as an industry we don't do particularly well. Treat your perm candidates the same way. Make sure that when you place them, they're staying there, obviously, but follow them, track them so that when they're looking for their next role, they come to you first, just as a contractor will. And there's enough information out there so that you can help yourself to read market signals, not just be a filler of job roles. You know, your communication would be better. You're more intelligent. Your perm is still a big player. So nothing in this webinar are we saying that perm you shouldn't be doing it. It's still a big player, but you've got to be stronger, more disciplined, more candidate engaged in 2026 than ever before.
I think it's interesting. I think the permanent consultants that don't change how they sell themselves in 12 months' times, they won't get made redundant, but they'll stop getting callbacks from clients. And what will happen is nobody will tell them why. And that's happening already. People just aren't admitting it and they're blaming the market. I think there's still agencies doing a massive amount of perm work in all markets. So if you're
Yeah,
not on that trajectory, then you need to do something that changes. And I think what we need to do is we need to start selling judgment, not access to candidate pools, because anyone can find a candidate, okay, but almost nobody can tell a client which ones are actually going to work out and which ones are actually good or bad, okay. And so I don't think, as we said before, the talent pool is getting smaller, but the quality candidates are getting fewer, and there's a less number of qualified candidates per job. Whereas the average pool of candidates, the pool of chancers looking for pay rises, looking for counter offers, that's getting larger. And just look at the explosion of counter offers. Right in the
yeah,
middle of that
yeah.
because our candidate pool is that average candidate pool. So, as we said before in the last question and this question, starting that relationship before the vacancy exists and having a good understanding of what the candidate wants is really important. So it's about now two relationships, one with your client and one with your pool of candidates that match your client's needs. And the consultant's value can sort of be replaced very quickly, as we found out by chatbots, AI, and things like that. What can your consultants do that the AI can't? And over the last sort of 4 or 5 webinars, we've been discussing this, and I feel we'll be still discussing it for quite some time because AI is not the nirvana, but if used properly, guided by an expert human, it will become close. And that's the conversation, guided by an expert human. The quality of your AI is a reflection of your capability of using AI. So remember, it only answers your questions. So if you're asking it expert questions, you'll get expert answers. But if you're asking it average questions, you will get average answers. So your knowledge of recruitment is expert, but your knowledge of using AI is probably remedial at best. And therefore, we've got to start to think at how we change that and what we do. So it's not about buying AI tech, because that's not going to help you unless you understand how to use it. And if you think about tech, we've spoken this before, go speak to Bullhorn, go speak to Vincere, go speak to the big players, and they'll tell you that on average, only 25% of their capability of their systems ever get used. Now, if they're putting AI into that system, guess what? The same stat will come out. They're only using 25% of the AI's capabilities, not because they can't use it, it's because they don't know how to use it. And there's a big difference in those two. So I think the best perm consultants in 2026 will act like advisors, but with a fee attached, not an order taker with a database. And I think that's a huge difference to what we've got and how we move. So let's just sort of finish off then on the last question, because I think this is quite an important one. We've coached agency owners on 3-year business plans, and we do this an awful lot. Why do so many of them see this, or why did so many not see this decline coming and are still waiting for another 12 months to act? Whatever path they choose, what should they be doing right now?
Well, I think part of the reason why some of them don't act is because as they look at the numbers look okay. Revenue may be declining, but it's not a crisis declining. The P&L is uncomfortable, but it's not alarming. The cash is coming in, the team is still busy. The psychological permission that you have to give yourself to act decisively just isn't there. The pain isn't sharp enough yet, so they don't act. Often the diagnosis about firm and contract is contested internally. Is it a market issue? Is it a team issue? Is it a model issue? Is it a client issue? Often owners will spend the first 6 months debating all of these things. And what they're not doing while they do that is moving and acting and executing on a plan. And sometimes, we see this a lot of time, the options all feel like admissions that you don't really want to face up to. It feels like giving up, restructuring seems like a failure, pivoting to a new model means you're admitting defeat. It's the wrong way of looking at it, but from a psychological point of view, I understand why people look at it that way. And also, acting now, it locks something in. And if you've got the right plan and you know how to execute and you get going, then your business will be the better for it. And I think the final one is, which is kind of what I was alluding to at the beginning, the identity is deeply tied into the business. So to do something new or different or focus somewhere else can feel quite painful. It's much harder to move a cognitive step and move forward than it is to read a spreadsheet and go, I don't really want to do this.
It's interesting, that conversation, isn't it? Acting. And I think by acting, you're admitting that your last 2 years' plans were wrong.
Yeah.
And I think sometimes people's ego don't allow that, and they're going to carry on regardless what's going on. And I think there's no shame in being wrong, and I've been wrong loads, and there's no shame in it. But even the best get caught out. But once you get caught out, it's about pivoting quickly, changing and adapting, rather than casting the blame onto something else like the market. And I think too many agencies at this moment in time feel that busy is progress. And so most owners confuse activity with strategy right up until the bank balance disagrees with that. And I think your fill rate demonstrates that this more than anything else that you measure. And if you're not measuring your fill rate, then you've got to start to understand that what's going to happen is that your bank balance will follow your fill rate. So if your fill rate is sub 50%, then you've got problems. And lots of people won't admit that because the average fill rate in the UK is between 20 and 30%. But that's a big issue. So I think as a business owner, no one sort of budgets time to think. Okay. We're too busy billing or too busy building something that doesn't actually need building. And I think I'll give you a prime example. I had a client call me up last week who I'd given a free session to about 18 months ago. Reasonable sized business, 6 or 7 heads in the business. And they rang me up last week and said, I'd like to engage with your services right now. Okay. And I said, okay, tell me what's gone on over the last 18 months since last we spoke. I've kept in touch with them. I've done a reasonable amount of work with them since then, free of charge, just giving little bits to help them. And he said, well, actually, I've got a confession. Where I've been telling you we've been doing really well, actually, we've been really struggling. We've been doing this, we've been doing that, and I now need your help. And I said, right, okay, let's start to talk about what you've done. He said, well, some of the things that you talked about, we started to do them. We didn't see any revenue from them. We started to abandon them, but have now realized we shouldn't have abandoned them. We should be doing them. And I asked one question, and then I said, no, because the question was, how many people have you laid off? Out of six, they'd laid off four. So I said, now talk to me about your cash flow. Cash flow, real problem. So I said, I'm happy to work for you, but you need to pay up front for that work because I believe you've got a cash flow problem. Are you now coming to me at last chance dance when 18 months ago, when you had the cash flow, we could have put these things in place and held you accountable to these things, and we probably wouldn't be in that position where we are now. And that's the bit where I think having that accountability is there. Further conversation about rate, their fill rate in the last 5 months, zero.
Right. Yeah.
So not changing, still doing the same old things over and over again and expecting something to change, is absolutely foolish. And we've got to adapt quicker than ever before. So the question is about, that 12 to month 18 delay isn't caution. That's just avoidance. It's avoidance that something's happening. And that's the quickest route to failure. And I think anybody who's sort of on this webinar or listening to this afterwards, if you do nothing today to affect tomorrow and you keep doing the same things and having the same conversations over and over and over again, then I'm sorry to be gloomy, but the reality is that that's what's going to happen. You're going to decline very quickly. And I think we've now got to change those things to make things work. And I think without that change, we've got big problems. And it's a gloomy note to end on. But for those who have changed, there's a huge opportunity. And taking that opportunity and taking market share is what we should be focusing on right now. But taking market share of those clients who are the right clients for you to work with and those jobs that were the right jobs to work on. So,
Well, I can leave you with a positive message thinking about 90s rock legends and what you said earlier on, Howard, is that AI is not nirvana. Never mind, become an expert. That's how you'll survive.
nicely put. Next week, we've got a really interesting webinar, though, coming up about your fees. Are your fees being squeezed from every direction? And we're going to address on how to fight those fees. So, ladies and gents, thanks for your time this week. It's been much appreciated. Dave, thanks for your input as always. Ladies and gentlemen, if you want to see us next week, same time, same place. Okay, if you're already signed up, great. If you're not, sign up, and we'll see you all next week. Dave, thanks for your time. Catch you later.
They come up.
Bye.
All right, see you, everybody. Have a good week.